Okay, so what I want to do is go through the cash flow quadrant. And I wanted to kind of go through the cash flow quadrant, do some explanation, and kind of walk you through why this is such an important aspect of as we're building assets. Okay, so what is the cash flow quadrant? So Robert Kiyosaki basically says that if you look at the cash flow quadrant, it gives us an idea, an indication of where each person falls into it from an income perspective. Okay, so let's put income up here. Okay, so this first quadrant is what we call the E quadrant, right? E stands for employee, right? This is where you're trading time for dollars, okay? So as an employee, you work and you figure out, okay, you negotiate with the employer of what your value is based on what your expertise is, and the employer from the other side of things is doing the same thing, saying, this is what we find as valuable or what this position is worth. And between your negotiation develops the income that you earn, okay? So as an employee, you trade time for dollars. Now, the bottom here is the S quadrant. This stands for self-employed, okay? Real estate agents, CPAs, attorneys, some financial advisors, insurance agents, that sort of stuff. Where they don't have a big business, it's more of a service type thing. But here, you're still trading time for dollars. Because this individual, if they left for 2 weeks, what would happen to their income? Right? Versus the employee, they get vacation pay, they get sick pay, right? So for that comfortability and for that predictability, employees seem to be fine with trading time for dollars, okay? Now, as self-employed, you got to do all these things on your own. Now, this side of the quadrant, the left side of the quadrant, is what Robert Kiyosaki and what we consider the least tax efficient, okay? So, tax efficiency, low. Okay? It's not very tax efficient. These, as you go through our process, our training process, you're going to hit the part where we talk about the tax brackets, and then we'll go through the 1040 in one of our other workshops and our other sessions. We'll talk about why that is. Okay? Now, if you're in either one of these, that's okay, just as long as you know that, right? And so if you're an employee and you're getting frustrated with the way taxes are, you're getting frustrated with whatever the case may be, well, this is why, okay? Now, on the right side, this quadrant is what we call the B quadrant for business owner, okay? The business owner has what we call a system, okay? Basically, they have employees that are part of a business, a system, that are creating widgets or offering whatever the case may be that the business is offering. Okay, so you can look at a McDonald's, right? There's a particular system in place. So franchises are a great example of this. If you're a manufacturing company, it's a great example. The owner of the company could go on vacation. They may have a salesperson that's selling the product. They have people that are building the product. They have accounting that's accounting for it. So the business owner doesn't necessarily have to put all their time and effort like an S quadrant person would, like a self-employed person would. Okay, now down at the bottom here is what we call the I quadrant. Okay, stands for investor. This is the investor quadrant, where you're basically taking the income that you have earned, the assets and the cash flow that you have earned, and you're putting it in other assets or other investments. Okay, so the idea and the goal here is that they accumulate, they grow, they compound, and they end up spitting out some type of income for you as well. Okay, now this right side of the quadrant, the tax efficiency is very high. Okay, so as a business owner, what we do in our firm is we teach people how to utilize their business to create the ability to build more assets. To build more assets, which essentially increases the income possibility down the road. And we can talk about that. You can learn about that as you go through the rest of our membership site. Now this side is the most important. Now where are you at? Okay, circle, as you wrote this down, circle where you're at. Okay, now notice that wherever you are at, draw an arrow to the I quadrant. That's where you want to be. You want to create multiple streams of income. I'm not sure if you've heard of that term before, but multiple streams of income gives you the opportunity to have these assets compounding. Now, Robert Kiyosaki and his advisors have this term called velocity of money. I love this term. This term basically says that I have assets that are compounding, and I have enough assets compounding to where the velocity of my money is increasing and actually is growing and is outperforming my own personal wherever I circled. Okay? That's ideal. All right? So that's what we're trying to accomplish. Now, please don't misunderstand me when we talk about incomes, net worth, assets, all that fun stuff. They're all different ways of describing those and defining those. But this kind of, I wanted to spend a little bit of time kind of going through the cash flow quadrant, give you an idea of what this is. Now, if you want to know more and you're interested to know more, I highly recommend to go to our website, click on Cashflow Quadrant, purchase the book by Robert Kiyosaki from our website, and you'll be able to read it on your own and go through it. And so he goes clearly more depth than I did here. And he'll go into each section and talks about and story about his rich dad, poor dad, and personal experiences. It's a very good book. And actually, it's the book, I think I've shared it with you before, that actually caused me to get into this business, to create enough desire to want to make a difference. So it's very good. You don't have to read it, but this is the premise that we look at when we're in building our assets and we work with our clients. So if we have clients that are in the S quadrant or in the E quadrant, depending on their income and their expenses, our goal is to try to shift them into the I quadrant by shifting dollars, okay, the most efficient way, and everybody's different. So I can't give you any other advice other than that. Everybody's different. We've got to look at everybody's asset and figure out how we do that. The idea and the goal is to, as we're building this, to creep up into the B quadrant as well. I think it's very important to have a B quadrant and an I quadrant, and here's the reason, is that the B quadrant, there's a lot of tax advantages in the B quadrant. In fact, I know that because that's what the IRS says. So I'm going to listen to them since they're the ones that tax all the income. And so as you go through our training program, the membership program, and when you start learning about the deductions, the two types of deductions, that's where we talk a little bit about the B quadrant and the value of it. But you want both of these. And the reason being is that this area can create a lot of tax efficiencies that allow you to build this area and vice versa. Okay, so you want to buddy these two quadrants up. So anyways, I appreciate the time. I hopefully this was informational for you. And if you have any questions, jot those down in your workbook. So when if you sign up for the complimentary 30-minute session that we're going to offer you later on, I just spilled the beans, but we're going to offer you a 30-minute consultation. That's the time where you can ask the questions that you're jotting down. So jot them down. Again, this is Robert Wolf with Terra Firma Business and Financial Consultants. Thank you so much.